Hey everybody, today's September 28th, 2023, and today we're going to talk about the stock market and where I think the stock market is headed for the month of October. And before we begin, please read the disclaimer and you can pause this video as you read it. Okay, so September was a pretty red month. Had a lot of things happening. First of all, we dealt with the previous rate hike of 25 basis point in the last month, and this month there was a pause in the rate hike, but the Federal Reserve basically, Jerome Powell said that he's still open to raising rates more, and so we basically had a plunge after he said that. So yeah, so right now the market is in a bit of a pullback, but there is still hope that we perhaps have bottomed out, right? And I believe in our last video I talked about how I was looking for this level to hold. Like I said that pulling back after such a spectacular breakout, right? So basically we've been in this sort of sideways pattern for a year now, right? And we kind of made a low in October, but after breaking out of the range high, which is also coincidentally the Fibonacci resistance level, we kind of had a nice run. But I was also saying that I wouldn't be surprised if we had a pullback, at least down to this level, oops, down to around 445 on the SPY, right? Which is the previous. So usually the previous resistance level tends to act as support later on. So I thought coming down, if we were able to hold this level and also the 50-day, which is a silver line, the short-term moving average, then that would be a nice bounce higher. But we failed to hold over here, right? This is around the time where Jerome Powell said that even though they're not raising rates in September, they're pausing, they're still open to raising rates in the future. And in the last 2 months, we've seen inflation actually go up. And you can see over here that since June, we actually had a nice, I guess not a nice, but a small bounce, right, in the inflation rate, even though we've been going down since the peak in June of last year at 9.1%. See how we went down, and we actually went down all the way till June. So basically a year of downtrend in the inflation rate, and now we're seeing a bit of a spike, right? And you're seeing oil prices. If you've been watching the oil pump, oil prices have been climbing steadily, and so a lot of that is fear that people think that the Fed might continue to raise rates higher if inflation continues to grow higher, right? So this led to a bit of a dump down. However, there is still hope, right? Even though we broke through the levels that I thought we're going to hold as support, especially the midterm moving average, that 100-day moving average, there are some technical factors, right? First of all, we hit this Fibonacci level, right? And Fibonacci levels tend to act as pretty strong support resistance level. So over here we have the kiss of death, right below the 200-day moving average, right? We failed to hold this Fibonacci level as well. We just plunged, right? And over here we tried to hold several times. Most noticeably in the last 2 times in the beginning of this year and also during the March regional bank crisis, we held that level, the Fibonacci resistance support level, and we ended up going up higher, breaking above the resistance and moving up to the next level, right? And now we're coming down and retesting this level again. And not only that, there's also a gap down here, which we have, filled most of it. We might come down later to retest the 200-day if the market wants to come down and try to fill in this gap and perhaps test this Fibonacci level again, right? But on the bright side, there's also a gap over here, right? That might be filled on the way up. Now, what I don't want to see is for us to come up, fill the gap, and then come down, fail to hold support, and then push up lower, right? Because that's definitely a possibility. However, for now, I do believe that I think this next month in October, we'll probably see a consolidation, and hopefully we can see the bulls gather some strength, absorb some of the supply, and push the price, the stock market higher, right? It's the S&P 500. But for now, we are in a short-term downtrend, right? Lower highs and lower lows. So until we are able to correct this, right, start making higher lows, perhaps something like this, and then of course break through this 450 level, something like this, and then higher, go higher. We are still in a short-term downtrend. So this is something to watch out. We are at a very sensitive area right now near the support level of the Fibonacci. So yeah, so I'll be eyeing this in October to see if the bulls can defend this level. So to me, Fibonacci level, very important, this gap as well, and especially the 200-day moving average as it starts to creep up, and there's going to be a point where they're going to meet, right? And that's going to be a strong test to see if we can hold this level. So right now, S&P 100 I think is in a pivotal level. Especially this level also is, of course, the previous resistance level here, right? So we're able to hold this level, then I think that this could be a strong base of support to push the stock higher, right? So Funnily enough, last week I made this post on September 20th, how I said, oh, nice recovery, right? And like clockwork, it just suddenly plunged down, right? And it did look really good, right? We went down, came back up, looked like we were holding the 50-day, and it just plunged after the Fed meeting, right? So yeah, funny how that works sometimes, right? Anyways, let's look at some other data, right? The Fed run rate, 5.33. So people are saying they might push the rates even higher, maybe another 25 to 75 basis points over the next year, up to around just under 6%. I don't know if they're going to go over 6%. We're going to have to see how inflation goes. Right now, against we said previously that the rate of inflation is starting to creep up a little bit, but this could just be a small bounce, right? Sometimes it doesn't just go straight down. There might be like a bounce along the way up before it goes even lower. So hopefully that is the case, but we have to wait until October, mid-October to see. And I think the Fed is going to react to that. I think if there is another rate rise in the inflation and CPI, then I think that the Fed might act and raise at least another 25 basis points for their meeting, okay? And so that's something to watch out for, another risk factor. But it does look like the Fed is trying to get reduce their tightening program is starting. It is working, as you can see. We've seen a reduction, right, in the assets on their balance sheet, right. So we're starting to. But let me just go back. Even though they've done they've risen rates for over a year now. They've done a lot to tighten, right, and remove some of the money supply, right. But we're still at the same level at 2021, so there's still a long way to go, basically. So that's another thing to look out for, right? Of course, the Fed, their ultimate goal is to get to 2% inflation rate, and yes, as it's creeping up to 4%, unless we start seeing a decline in the inflation CPI data, that's just another risk factor, another headwind we have to deal with, right? Potentially, the Fed raising rates again. Again, the 2 and 10-year yield still inverted, right? This historically has predicted a recession after it uninverts, right? Here, 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 and most noticeably here during the COVID pandemic. So when we do reverse and go above 0, there is a possibility we might have a recession. But we've been talking about recessions for so long now that we might end up just having a sort of price-in shallow recession, right? But of course, we have to see as the market develops going forward. Right now, the market is in fear, so this is also another sign that with all these factors and with the market being down, potentially it's the bottom, right? If we can hold the Fibonacci level here, the bottom, this could potentially be a good time to buy. So I am nibbling a little bit, adding to some of my positions, but a lot of times these movements, let me just get a cleaner chart on the S&P. So you can see in the bigger picture, right, where we're trying to hold, where the market is trying to find support is also a previous support, right, before the plunge. All-time high in late 2021. It's also a resistance level here, right, in 2022. Let's get the clean chart over here. And it was also the breakout point here. So these technical factors tend to kind of, there's a beauty in which it sort of lines up, right? But for now, what I'm looking for is for us to hold that level that I just talked about. Also, it just happens to be the Fibonacci level, right? Fibonacci level, support level, or at least we're trying to turn it into support, right? What was once previously resistance, now we're trying to turn it into support, right? And a gap here that has, see, just see very quickly. Yeah, so it actually has filled. So we actually did fill it yesterday, which is good. But now we need to follow through on that and then go up higher, right? And not only fill this gap, right, from a couple sessions ago, but continue higher and put in a higher low and then a higher high by taking out this level, right? So that's what I'm looking for right now. I think the market is going to spend October probably consolidating, trying to build a base before going up higher, right? Because we had a pretty bad flush to the downside after the Fed, Jerome Powell's remarks about possibly raising rates further. But really, we need to wait and see what's going to happen in October CPI, and hopefully inflation starts to come down a little bit, and that'll give the Fed more breathing room to continue either the pause or to maybe consider cutting rates in 2024, right? But I don't think they're going to cut rates this year. The year's almost over anyways. So yeah, so just to summarize, for the month of October, I'm looking to see if the market can defend this level. Okay, so what is that? Around just above 420. I want to defend this level, Fibonacci level, stay above the 200-day moving average. And if we can do that, I want to see the market make higher lows and higher highs, right? Fill in this gap, make higher lows, higher highs, and signal that the trend is reversing. Because right now, in the short term at least, over the last 2 months, the trend is down, right? Lower highs and lower lows. Lower highs and lower lows. So that's what we want to see. Unless there's like incredible news, like the CPI is very cold, and the Fed signals that they're going to potentially be open to rate cuts in 2024. I don't really see us having a quick reversal. Could be wrong, but I'm trying to be conservative, especially in this market where there's a lot of headwinds, with interest rates still high, right? And potentially more, and with potentially more increases in the interest rate in the coming sessions with the Fed, right? So that is it for now. Definitely watching the market and trying to be a little conservative, but hopefully the market can put in a bottom here, and we can come back to you next month and see the market has recovered some ground to the upside, right? Okay, thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.